Hey guys, what's up? Damon here. It's been a while since we talked about an individual stock. Today we're going to talk about Apple. Apple is not my favorite stock, and it's certainly not my favorite stock to talk about because every time I do so, people get upset. Why? Not because I'm saying Apple is a bad stock to hold, it's because I'm saying Apple isn't the best stock in the world to hold. And that makes people say, hey Damon, why don't you like Apple? And I say I don't dislike Apple. Look, here's the thing with Apple. It used to be a growth stock. Now it's not. It used to have strong profit margins increasing. Now it has leveled out profit margins. I'll show you all that in a second. All I say about Apple is that it used to be a growth stock and now it's a value stock. It has started offering a dividend. That dividend's going to grow in the future. You can buy Apple now and have a good dividend tech stock in the future. Or you can just lie to yourself and think that Apple is going to continue moving upward when its growth phase is already ended. Alright, so I wanted to see if any other people had this kind of contradictory contrarian idea on Apple. I just typed Apple stock into YouTube. YouTube is, by the way, the second largest search engine, so don't laugh at me for using YouTube as my first go-to place for information. Well, I was looking at YouTube and I thought, oh, this guy looks pretty reasonable. Yeah, let's check out his video. So, I watched his video. There's really nothing to say except he is... Here's my theory. Alright, I don't know anything about this guy, but my theory is this. These days, because of social media, you see a lot of experts getting money from also teaching what they do. So, you might see a doctor have a YouTube channel teaching you how to raise your metabolism. But what happens is, everybody else sees this going on, and a lot of people who have no background in that field decide it would just be easy to read books and regurgitate that information and act like I'm a doctor or act like I have some expertise in this field and therefore make a living by just kind of teaching, using my personality to teach what's in books and what's in papers. So what you get is, it's ironic because some of the most popular information isn't popular because it's good information, it's popular because of the personality presenting that information. So I'm going to break down what this guy says, and I'm going to show you why pretty much everything he says is wrong. So his thesis is that because the iPhone 7 is coming out and it represents a bigger upgrade than the previous iPhones, Apple stock is going to fly. And essentially what he's saying is, we haven't missed the boat yet. The most popular stock in the world is still going to be one of the best stocks to own, so therefore, buy it. Unfortunately, I think we can all agree that the entry, the basic timeline on which you could have become rich, like these two people down here, Apple stock made ordinary investors millionaires. That timeline, we've passed it. We're at essentially the same level Microsoft was at after everybody started using Microsoft. The stock had already grown. Alright? Now, where's it going to go from here? That's an important question, and that's what we're trying to answer. His answer to that question is, the fundamentals are great. Did you know that Apple sells iPhones and Apple Watches? Those are really good things, and people really like them. This is the same kind of common sense investment strategy you get from pretty much anyone who is at that beginning level of the Dunning-Kruger curve where they have a little bit of information and they suddenly think they're experts. You see this all the time. I see this all the time with these skinny guys, these skinny Asian guys who always say there's always going to be like a group of 3 of them and one of them is teaching the other 2 like how they should work out at the gym. They're saying like, you know, go to the gym and do 100 of these chest presses and you're going to get strong muscles. The thing is, if you look at all 3 of these guys, they look the same size, so it just doesn't make sense for one to be giving the other 2 information. Now that's a special case because you can see clearly that one, I mean, you can see if someone works out just by looking at their bodies. But if someone's trading well, you can't just see that from that person's face. You have to listen to the context, or to the content of that presentation, such as the YouTube presentation. Now, this is the same kind of investment information you get from, you know, your aunt who has a few stocks in her portfolio, and she's like, I went to TJ Maxx the other day and it was packed with people. I think that stock's going to do pretty well. It's just this kind of common sense, the product's good, therefore the stock's going to rise kind of idea. Well, iPhone 1, nobody knew that would be good because it had not come out. So you would have had to foreseen what that would do to the market to invest in stock in the right place. But here, it's just another update of something that already exists. But let's not talk about the fundamentals. Let's talk about the real reason why you're here is probably because you know what type of investor I am. And that is an investor who bases his info on statistics and historical patterns. So this guy points out, well, he doesn't bring up any pictures, but he points out, if you want to see how Apple stock is going to do in the future, all you have to do is look at iPhone sales, because 60% of Apple's business, 60% of Apple's revenue comes from the iPhone. And I think this guy just doesn't do his research at all. He's just trying to make money from YouTube. My guess is that he makes more money from YouTube than he does from actually investing. Because check this out, you just type Apple revenue sources and you hit images, and your first image that comes up, there you go. You got your iPhone takes up 55, round up to 60% of revenue. Well, the funny thing is, if you click on that image, you get to an article that's from the very beginning of 2014. That image, he's giving information that's 2 years old. Realize he pointed out that people should buy in September, early September. Where is Apple now? After September, I'm pretty sure it's down. Let's take a look. Where are we? Where is September? Alright, so yeah, September we were at a relative high, and throughout his video he talks about how sentiment in Apple is negative, but we were at a high. He's telling you to buy at a high, and now Apple is down. But that's not the point. The main point is he's saying, the iPhone's doing great, and that's where Apple's money comes from. Unfortunately, the iPhone's not doing that great, and therefore Apple's money is going to be declining. Here's what you should do. If you're ever going to do searches for charts on stocks, type in the company's name, Apple, type in the metric you want to look at. In this case, it's going to be iPhone sales. Hit enter, but you're not done yet. Here's what you want to do. You want to click on more, or not more, you want to click on search tools, then time, excuse the Japanese, and then choose your own time, custom time. What you want to do is you want to step back, probably start it a year back or at the beginning of the year. So here I'm just going to start it on the 1st of January 2016, and we're going to look at the period all the way up to the current date. And what that does is it ensures that we're getting more up-to-date info, so we're not clicking on something that's 2 or 3 years old. And check this out. iPhone sales will drop in 2016. And it gives you that nice chart that shows you actually the iPhone's not doing that well, and we've seen the peak essentially. So this guy is telling you to buy at the peak. He told you to buy at a high. Doesn't do any research, and it's not. I'm not going to say that it's completely his fault. It's also the fault of the people who listen to him. I'm not sure what the comments say. I'm pretty sure they're stupid. Yeah, people are buying. He said, yeah, I'm going to buy it. I hope they're not convinced by him. Of course, it's partly his fault for not doing the research. All you have to do is just dig far enough and you get the most recent stats. And I want to show you a few things. I'll show you some fundamentals before I get into the technicals. But check out Apple's debt. This is not the sign of a growth stock. The growth happened when Apple had no debt. Its net worth peaked in 2013. Its net worth is still the same as it was in 2013. The difference, however, is that debt has been rising, and if it continues on this path, it will overtake net worth, meaning Apple will be in the red. Then you just need to look at the revenue. Even though Apple revenue had peaked, well, let's not even worry about that for the moment. Let's not talk about the peak. Let's just say Apple revenue is declining, right? And so profit is declining as well. But more importantly, look at the difference between the green and the purple here. Look at that size. You see as you go forward how that increases. What that means is the company needs to make more revenue, but when the company makes more revenue, it doesn't necessarily lift the profits. So the profit margins pretty much peaked at 2016, and we're not going to see many increases in the profit margins anytime soon based on that pattern. But what I really want to show you guys right now, because we're talking about, you know, someone recommending to buy Apple at a high, I'm going to tell you that Apple has a seasonal trend, and I've written about this before. And the seasonal trend is essentially that Apple stock tends to have bad Decembers. So here is the seasonal trend for December. Let's see if we can make this bigger. So there it is in the middle. In December, you've got an average decline in Apple. Now you see that in September too, but September is skewed by this anomaly in September. So forget that for a second. Just notice that the Sharpe ratio for December is negative. That means the risk-reward profile is not good. It would be better just to hold cash than to hold Apple on average. Now, this is not... a lot of people think of Apple as a new stock, but really we have data going back 20 years here, and you can go back even further. But here's the idea. If December is the average down month, why would you want to play your cards like that? I mean, the statistics tell you not to buy in December. So even though we're down, it doesn't make sense to buy, right? Even though Apple looks relatively cheap, it doesn't make sense to buy. The reason, the fundamental reason Apple tends to be down in December is institutional investors generally will rebalance their portfolios and sell Apple stock at that time, so that they don't have too much of one stock or one holding in their portfolios. What am I doing? So if you want to check out that article where I discuss that, I have a lot of Apple articles, and I generally don't like writing them because there's too much arguing that goes on in the comments section. But if you want to check out Damon on Seeking Alpha and read these articles, they're all free, by the way. You can see here, this one, editor's pick. Just check. I got two, but this one, you could read both. These are probably the best ones to read if you want to get my general take on Apple. This first one, Another Bad Winter Coming for Apple at the Hands of Institutional Investors, discusses why Apple tends to sell off on December. And the second one discusses why Apple is going to be more of a value stock in the future and not a growth stock. So the growth stage is pretty much over. If you're looking for something that offers dividends and you want to get in at the ground floor, then Apple, treated as a dividend stock, is probably a good buy. But as for growth, you're not going to really see that in Apple anymore. It's got a monopoly, but it's not a company that has a monopoly generally doesn't need to innovate. And it doesn't innovate because there's really no competition. So it just holds that market and it continues making revenue in the same way it has in the past. So any product updates really don't matter. And I actually wrote an article before that, right here. Buy before earnings, not before product releases, a statistical study on Apple products, which basically says the opposite of what this guy said. And mine is supported with data, not with so-called common sense. So check that out. And I think you'll see at least you'll see my perspective on Apple, if not have a different perspective yourself on this stock. I'm putting this video on YouTube first because if I put this on Seeking Alpha first, I'm gonna get bashed by fanboys. Many stocks have strong fan bases, so if you say anything somewhat negative, you're gonna be bashed. But you should see that as a good reason to short such a stock, because there's always going to be a positive bias that's propping up that stock via hype. Many of those stocks are called glamour stocks, and they're really good earnings plays. So if you ever want to short a stock or buy put options before earnings, those glamour stocks are the best targets for doing so. So that's it. I hope you liked this video. If you did, please subscribe and hit like. I would appreciate that very much. And leave a comment if you have a question or a request for another video. Peace.